Rising rates and economic uncertainty putting a cap on IPO activity and on venture capital investing. According to one estimate, the value of new VC deals globally has plunged 42% the first 11 months of this year compared with last year. Will next year be more of the same, or could we see a bounce back? Joining us is Adrian Mendoza, the founder of Mendoza Ventures. Adrian, welcome. It's great to have you here. And what do you think?
Yeah, I mean, it's been really interesting. We've seen a lot of the name brand funds in the last 6 months stop deploying. We've seen IPOs come to a grounding halt. And really, what does that look like for 2023? 2023 is going to be still a slowdown of IPOs. They're going to remain flat, as well as we're going to see still a continuing of the tightening of the belt of the IPO tech companies. And in 2023, I predict we're going to see a trickle down into pre-IPO and mid to early stage companies. And this is really what we're going to see very, very interesting next year, because one of the interesting facts about VC is they're still reportedly $290 billion sitting on the sidelines of LP dollars within funds that hasn't been deployed.
And that's
even if estimates that we're seeing are, it may be as small as 160, that's billions with a B.
But Adrian, isn't this what a lot of venture capitalists wanted? I mean, I kept hearing over and over again, boy, these valuations have got out of control. But hey, this is just what it costs to get in now. So we're in there. But boy, we can't wait for this stuff to rationalize. Isn't this what it takes for stuff to rationalize? I mean, when the market doesn't want to pay.
John, you are absolutely right. And the VCs love a deal. And the reality is we're still going to see most of these name brand funds, kind of stall in fundraising. But here's where what's been pretty amazing in this market. Emerging fund managers in the space have taken the pole position of come in at these great valuations, much better stakes, much better economics for them and their investors. And of 2023, these VC dollars at $290 billion that's sitting on the sideline is going to have to get deployed, because LP dollars can no longer sit for 6 months to a year to 2 years not receiving gains. So we are going to see a bounce back. I feel like it's going to be a wave that's going to come in and crash down, and 2023 is going to be an interesting time for VC deployments.
Deployed where, though, Adrian? Because there are a lot of people with egg on their face about their crypto investments, for instance. We know that's not going to maybe be the place to go. Where is it that you think funds are likely to be welcomed? Well, the funds will be welcomed anywhere, but where do you think they're likely to go?
The interesting thing about the FTX debacle is it not just affected venture, it actually affected the pension funds, the large institutional allocators that are now going to be a lot more gun shy about some of these technology deals. And this is where, for me, I see a lot of movement in the emerging fund manager space, that first to third time fund, because the economics here in the US, innovation is still being created by VC. And this is my worry about that $290 billion, that it may just be sloshed around into things that may be VC ready, things that may not be VC ready. And this is my worry about 2023. I think we're getting a lot of good movement. A lot of amazing founders are still building profitable companies. It's whether or not, what's going to happen to that $290 billion. Is it going to be smartfully and skillfully deployed, or is it going to be like when the wave comes and crashes, leaves destruction and damage in its wake?